Now let's move on to the next question. This question came right after we did a webinar, and I believe the webinar was full of futures traders. So this is a little bit more in depth, Lee. I hope you're ready. So does the AI only enter long and exit in bull markets and stays out of the markets altogether during bear markets? And there's multiple parts to this. In other words, does the AI doesn't enter and exit in both bull and bear markets? I believe they said in the webinar tonight that the AI exited the market in December 2021 and has remained out of the markets. Or did I not hear that correctly? So it's a multiple part question, Lee.
Yeah, I'll
Why don't
take
you
a
start?
stab.
Yeah.
I'll be brief with it. So philosophically, we're either long or we're in cash. So when the AI is sensing that it's not a good time to be owning that particular stock or that ETF or the market for that matter, just like we saw with question one when we talked about Apple, when that said the AI had us out of the market in Apple. So you're either long or you're in cash, quite frankly. We don't short, at least currently we don't short. So really what we're trying to do is capture the bull markets and then really let the bear markets bypass. And the AI plays, sometimes we get it really close to the bottom and the top, buying pretty close to the bottom, selling it towards the top. But we really, I would say on average, we're playing between the middle, 80 to 90% or so. And to an extent, the AI makes the market prove itself a little bit.
Got it. So can you clarify the middle question then, Lee? The second question, the AI doesn't enter and exit in both bull and bear markets?
Yeah, so I mean, this is maybe I'm thinking of this too deep, but basically what the AI is trying to do is predict almost or even forecast what things are looking like in the near future, whether that's 30 days out, 45, 60, you name it. And hypothetically, in the meantime of both of those, it could go from a bull to a bear market or vice versa. So I'm not necessarily too worried about if it's a bull or a bear market. I'm more just put all my faith and trust into the AI to determine, what's the right thing to do, regardless of what type of market is. Now, obviously, some stocks, keep bringing up Apple, something that has a high beta, it's going to have a little bit more impact on what the market's doing. So to an extent there, you do need to know exactly what the market's doing in addition to what Apple is. But so sorry, not to totally bypass the second part of the question there, but that's not as important to me as I would say the first part of the question was.
Got it. Well, I know where Robin is coming from because I am also a futures trader. So I can understand the instinct to want to make money in both directions of the market, bull market, bear market, sideways market, ranging. I don't care. I want to be making money. That is kind of the most common mindset of a day trader. I will also say it is somewhat of a dangerous mindset because it really makes you prone to over trading. So I'm going to take this screen down and I'm going to switch to my trading view chart here. So here I have the chart of the S&P 500 futures. This is the continuous contract. If you're a futures trader, you know what I just said. If you're not a futures trader, don't worry about it. All you need to know is that this is a chart of the S&P 500 index, which is kind of the bread and butter for most performance analysis and comparison, right? So Robin, you absolutely heard us correctly on that webinar we did for your group. The iFlip AI had our iFlip customers exit December 28th, which is right here. And obviously you can see that each candle here, each bar represents one day. We are steadily heading downwards, right? It has not been a pretty year this year, right? Let me just do a real quick price check here and give you some numbers. So from December 28th to basically right now, we lost 25%. So if you're like one of those traditional investors that follow the mainstream media, that believe in the you can't time your market myth, you can't time the market, you just got to be all in all the time, eventually the market will go back up. Well, right now you're sitting at, let's say you started the year or you finished the year last year with like 10 grand. Right now, you're sitting at $7,500. You lost $2,500. Now that's you could have avoided that if you had used iFlip's AI. Now, I will be perfectly honest. iFlip's AI, it isn't at zero this year. It did attempt to buy some of these dips. Okay, the iFlip AI isn't some kind of fortune-telling machine. It is a pure risk management machine. Now, I don't remember exactly what dates because it was very, very short. It tried to buy, let's say it tried to buy this dip, right? But it couldn't make a new high and made a new low. They were like, okay, you know what? I'm going to cut that trade. I missed. I lost a little bit. It tried to buy, some of these dips, and it just couldn't hold on to a long-term profit. So I will be honest. Our AI trading the S&P 500 is negative this year, but it's not negative nearly as much as negative 25. Okay, it's lost much, much less than that. Now, over time, this is how we win. We've talked about how losing is much stronger than winning. So, missing the 10 best days of the market is totally worth also missing the 10 worst days of the market, because the 10 worst days of the market is way stronger than the 10 best days of the market, right? Most financial advisors will say something like, oh, you got to stay in the market all the time. You can't time it because you don't want to miss out on the 10 best days of the market, do you? And the real answer, the professional investor mindset answer is, yes, I absolutely do want to miss out on the 10 best days of the market if I can also miss out on the 10 worst days of the market. That will far outperform the buy and hold mindset. So, Robin, I hope that answers your question. I am totally, let me switch back to the question here. Yes, you absolutely did hear us correctly. It has not remained out of the market, though. It does attempt to buy dips. It just does it without any kind of emotion. Now, I have some comments on the second piece of the question as well. And let me switch back. Now, I'm going to get rid of this drawing. And I'm going to zoom out a little bit. So to give you a little bit more data, okay? All right, so now my chart can go as far as this right here is the COVID crash. Boom, that nasty crash down. And then all the stimulus package, the 6 trillion plus the other 6 trillion, like $13 trillion injected into the economy within a span of a year and a half or so, boosted it back up. Okay. And then now we're in this little downtrend for 2022. Okay. Now we're looking at a 2-year, 3-year span. Now, why did I bring this up? Because the question was, the way that I interpreted it, why doesn't the iFlip AI short? And there's a very simple reason. There's many reasons for that, actually. We work with a lot of retirement accounts, and a lot of retirement brokers doesn't allow shorting because they're qualified accounts, but whatever. Okay. However, strategically, from a technical analysis point of view, looking at the chart, if you look at this, the uptrend is nice and smooth. The range is very, very tight. Okay, it's a nice smooth ride up. Okay, but anytime it goes down, it's very violent. So let's look at the COVID crash a little bit. Okay. Again, each bar is a day. Okay, so just look at this is over a span of 3 or 4 weeks. Look at how much movement up and down there is. Look at how big the bars are. There's so much movement throughout the day. It's very, very volatile. And that's not really a good fit for AI trading, for AI investing. AI investing is when there is a measurable variance in the movement of the market within a statistically acceptable range. When a market goes down, it usually goes down very violently. When it goes up, it usually goes up very, very gradually. So the uptrends are more of a better fit for for AI, just in general. So that was the nasty COVID crash. Let's look at the crash that we're dealing with right now. So I'll go from from Tuesday, not Tuesday, go from December end of December to January. So look, we had a little bit of a downtrend. If I do this right here, is this the start of an uptrend again? I don't know. I mean, hindsight being 2020, we can tell that it's not. But how about this? It made a new high. Is that the start of an uptrend? Well, obviously history shows that it's not. So when the markets move down, they move down with way more range and they move down way more violently. So our AI says, you know what? That's too risky. I'm just going to stick with the long markets, or I'm just going to stick with going long during the bull market. It's a much easier game to play. So I hope that answers your question about why the iFlip does not short. Let me switch back here. The question is for you guys, though. Do you like to be in investments where you can short, or do you like to play it safe and just play long? Let us know in the comments section below how you feel about this strategy.